Good morning, everyone, and welcome to D.I.V E, Diversity, Including Various Ethnicities. I am Iris Owens, your host, and we are so happy that you are joining us today. We have a dynamic episode for you all today. We're going to drop so many gems today, so get your pens and pencils and paper ready to go, or your iPads, or however you take your notes, but just be prepared. Thank you, Stephanie. And so I'm going to first introduce you to my wonderful co-hosts. Good morning, Jessica, and good morning, Stephanie. Please introduce yourselves and say hello to everyone.
Good morning. I am Jessica Harrison. I am a realtor here in the Metro Atlanta area out of the College Park Cascade offices. And I too am ready for these gems today.
Absolutely. Thank you, Jessica. Good morning, Stephanie.
Good morning. This is Stephanie out of the Swanee office in Gwinnett County, also with Berkshire Hathaway. And I am just excited. Like, let's just jump in. Let's dive in.
Well, let's dive in. Well, good morning, Dora. We are so happy that you are with us this morning. We are ready. And so, Dora, I'm going to let you introduce yourself, and then we truly are going to dive into credit. Yes. So go ahead.
So yes, credit can be a difficult topic. People are very protective of the credit. People don't want to talk about the credit, but credit is important, especially in this country. So being invited here as a part of the diversity is not just a pleasure and a freaking out experience. Yes, I am nervous, but I am also very, very honored. My name is Dora Donaldson. I've been in this country for over 35 years. We're not going to talk about age here. This is about credit. I've been in the mortgage industry for over 20. I am recently moved here to Georgia, and I am tickled pink. It is very true when they talk about the Southern welcoming and the southern, what's the word I'm looking for? Hospitality.
Yes.
Everybody is so nice. I'm very, very happy to be here. And I am more than honored to be here in your podcast.
Oh, well, thank you. Thank you so much, Dora. We are excited that you are with us, and we are just ready to hear all these gems that you are going to share today. So, Dora, I would like to start with, and of course, we have questions that we're going to ask, but I would also like you to just give a little bit about, like you said, you've been in this country 35 years. So your parents came here. So tell me a little bit about, share with us your experience and your family's experience in credit and purchasing and being here in America, and how you all process money and spending.
So I came alone. I didn't come here with my family.
Okay.
I spent the first, I want to say 15, maybe 18 years without my parents. My parents are still in my country, my native Colombia.
Okay.
I have relatives here. They have been at moments great support. For the most part, I have to make my way by myself, and I have to learn about money right quickly. In my country, where I come from, money is king. Credit is something that you hear about, but it's not something that you are so intricately and so intimately related with. So establishing credit was something that it was new for me. And that was when I was in my early 20s. So I wasn't in this industry yet. But along the way, I have learned what is to build excellent credit and pretty much walk everywhere and get the red carpet roll at you. And I have also have to foreclose my homes, go bankruptcy, close my business, lose my car, lose all my savings, and start all over again. There is no shame in that. Circumstances happen, and hopefully you will learn from those bad experiences and get up and do it better the next time. There is some stereotypes that come with that. They didn't affect me. I'm still, I have a home already. I have cars, I have credit cards, and my credit is in good standing. So do bad things happen to good people? Absolutely, yes. Is there people out there that is not aware, one, or are not careful, or are not disciplined enough to keep a good credit, that is like the rainbow. That is everything for everybody. And so today I would like to focus on what it takes to have a good credit.
Mhm.
What happens when you have, I call it a lesion or a wound in your credit. What happens when you declare bankruptcy and go and foreclose on your house, and all that tied up to obtaining and getting a mortgage.
Okay, so awesome. You look, everything you just said right there was just so much, right? So thank you for just kicking us off. We are so excited. So Dora, with that being said, how is credit determined?
So the credit score is determined by a couple of things. Number one, your payment history. So the payment history makes up to 35% of your credit score. That's a big one. So it's not, credit is, I call it like a great mystery. There is conversations and there is articles about it, but there is not a science. If you do A, B, and C, this is your credit score, not so much. So number one is paying your credit on time. So your bills. I always, when I'm talking to my clients, my colleagues and friends and relatives that ask, I always tell them, don't pay on the due date, pay around the statement date. Okay, so that helps. Credit use is out of your credit available, how much are you using? For example, if your credit card limit is 10,000, do you have a balance of 8,000? I'll say try to keep it below 30%. So if your credit card is 10,000, have around $3,000 added, and whatever you, now it's not that you paid it off and keep it off. Charge and pay, charge and pay. Okay. The third one is your credit age. I always tell people the first credit card that you open is the last one you want to close. Why? Because when people in the credit bureaus are examining your credit, they look, how old have you have credit, and how old is this card, and how in good standing are you keeping it? The other one is the credit mix. We want to have, like, for example, your car payment is not the same as your credit card from JCPenney's or Sears. Okay, so different types of credit is a mix of credits, your mortgage, your car, your credit cards, your installment loans, and all of that stuff. And the last one is your credit increase. When a lot of people is checking your credit, that takes the credit score down. So normally when somebody is shopping me, I don't like that. I'm your only stop that you need to make for your mortgage. But if you're shopping me, make sure that you shop for this mortgage within about 30 days. So that only counts as one pull down, instead of you checking the credit in May, checking it again in July, and then when you're ready to buy your house in September. That's three different, very hard pulls. The pull for a mortgage is considered a very hard pull, because we're gonna see your bankruptcies, your credit history, your credit inquiries, everything is in there. So make sure that if you're in the business to buy a car, then go shop like in one weekend. Go get your car and get your pulling during that weekend.
Okay.
And that is not gonna affect
Dora,
you.
something you just said, can you just explain the difference between a hard credit pull and a soft credit pull?
Okay, so for example, you're applying for employment, and depending on the job, like for example, my job, they need to see that I don't have felonies, and that they don't, that I don't have penalties by some of the regulators in my industry. That is a soft pull. A hard pull is what we do. Another soft pull is for your utilities, or when you're trying to rent a place, that is considered a soft pull. It's not gonna have the extensive of all of your credit history in there. They are just looking for specific things, like, do you have a repossession? Have you been evicted? Have you been charged with a felony? Things of that nature.
Okay.
Okay, Dora, let me ask a quick question in regards to soft and hard. Both of them, of course, is going to show on your credit report as an inquiry. obviously soft will have less of an effect negatively to your credit score, but do they last on the credit report the same length of time?
Not necessarily.
Okay.
Our pool, for example, will stay there. We will definitely make sure that, we don't make sure, I'm sorry, scratch that. Our pool will stay in your credit.
Right.
The agencies, the three agencies, Experience, TransUnion, and Equifax, they will keep those records in there.
Okay.
All right. Next question, guys, whoever want to shoot next.
What is considered a good credit score? Because what I may think is good, Dora, you may tell me is not so good.
Oh, yes. And I get that a lot in my line of business. Normally, when I'm trying to interview somebody to get their pre-approval, I ask them, how do you think is your credit? And you know if you have good credit, and you know if you don't. So I'm looking at some notes that I have, and poor credit is between 300 and 579. Fair credit is between 580 and 669. Good credit is between 670 and 739. Very good credit is 740 to 799. Exceptional credit is from 800 to 850 and above. So there are a couple of things that you can do to obviously increase your credit score and get better. Some people might disagree with my lines. Like some people will say, well, good is between 680 and 750. I mean, but it's like right around there.
Right. Okay.
Mhm.
But this is a good guide.
Yes.
Yeah. Yeah.
I am not
I
speaking
thought I was good.
as an expert. I don't manipulate credit. I don't work for any one of those agencies, but in my experience, these are the categories that we consider good credit and exceptional credit.
Okay. Well, I thought I was good.
Okay.
May not be as good as I thought. I thought it was good.
You got some work to do.
But this is why we have these type of
Absolutely.
podcasts, so we can learn these nuggets so that we can implement them in our daily lives. So that
Yes.
what someone who may now be good can learn some things today and
Hopefully,
become
I
great.
hope so. Yes.
Yes.
So I'm grateful. Okay, I have some work to do.
So to maintain good credit, what do we need to do? So say I have good credit, how do I keep it?
Yes. So let's just start by saying that a thin credit or a credit that needs work, a poor credit score will affect you in obtain loans and obtain a loan, let's say for a car or a mortgage with good interest rates. So how do you maintain the credit? Let's say that you already fix it and now you want to maintain it. So the first thing I will suggest is to manage your credit. Keep track of your spending. Remember when I told you the use of your ability or your available credit? So if you have the credit cards that are charged with more than 30%, then my suggestion would be start tracking to those and start trying to get down to that 30. Don't exceed your credit limit. So if you have a credit card with 10,000, just don't go and get 11,000 on it. You might get approved for the charge, but that is definitely going to affect you. Keeping the credit utilization under 30 is like, in my opinion, is like the way that you maximize your credit score. Pay what you owe. Make sure that you're on time. Paying late, it will affect your FICO, and making timely payments is an important way to manage and increase and improve your credit score. Second one, the next one will be organized. By making timely payments, get organized. Everybody has a different system, but I would suggest get an alarm or get a calendar on when your bills are due. And remember what I said at the beginning, look at the statement date. that's when, if you put yourself that the bill is due the 15th, but the actual statement said that is due the 4th of the following month, if you make that payment before the end of the month, most likely the payment is gonna be on time. Now, keep a track on when, if you send your checks or your bills by mail. I'm one of those, I'm an old lady. I like the good old check when it's like, no, it's check number such and such, and it was mailed on this day, and it was mailed for this amount. If you keep track of when they clear that check, because let's say you send it the 20th, and the bill is due the 1st, if it gets that the 2nd, then now you're late. So keep track of that. And if because of your pay periods or your paychecks or how your finances are, sometimes calling them and asking them to change your due date will help you. So, or the other thing for the youngsters one, sign for an automatic debit when the account will be automatic deducted and send the payment. That way it's on time. Keep your contact information current. Like for example, when I moved from Chicago to here, we have to tell them, and I told them before I moved that I was moving, and there was one that I didn't get the bill, and I called them and I said, I'm gonna have to make the payment on the phone. You're not gonna charge me the fee for making it on the phone because 45 days ago I told you that I was here and my bill is not here. So if you're late one time and you have a record for years of being on time, call them and tell them, hey, listen, I just was at the hospital and my husband was out of town and or whatever. Tell them the truth. Tell them the experience that you have. Most of the time, they are not going to report you. They'll forgive the late. Now, if you're calling every other month to ask for a forgiveness on your late payment,
Yes.
Good luck with that.
Yes. I have a question just with regards to what you were saying. So like for instance, your credit cards or your car payment sometimes will give you a grace period, right? And
Yes.
so it says you're not late as long as you're paying in this grace period. But is that looked at upon as negatively if you pay it in the grace period and you don't pay it late, but you're paying it within the grace period? Is that looked upon negatively?
I haven't seen anything. I haven't read anything like that. I'll just say, if you have that unforeseen situation that you have to be in that grace period, but I wouldn't. The due date is the due date. And
Gotcha.
if you get a lender or a creditor that they are just not easy to deal with, not everybody is like that, then why taking the risk? That's what I said. If you have to arrange your payments so you
Yes.
don't fall into that, then like, for example, let's just do this. Let's say the credit card due date is August the 4th, but the statement date is July 15th. My grace period starts August 1st. Because if that payment doesn't reach during those 4 or 5 days, then now you're late. I tell myself this bill is due the 30th. So you teach yourself how to send it
Before time.
those kind of weeks earlier.
Yes.
Okay.
Awesome.
Yes.
I needed to hear that because I'm a due date person.
Yeah.
I'm looking specifically for the due date. Okay, you're due on this date. I'm trying to make sure you're paid on that date.
Yes.
So now I want to reprogram my thinking into
That the due
looking
date
at
is
that.
the statement date.
You're
Because
right.
that way you are way into the grace period that the payment will reach there on time and they don't have to do the accounting the day of that is due.
Now here is the thing. And I'm preaching to myself, y'all. So don't mind me. I'm preaching to myself.
No judgment. This is no judgment zone.
There is no
Thank you.
judgment
Thank you.
zone.
I feel safe.
Yes.
You are
So
safe.
for those individuals who may be like me, here I am thinking I'm paying off my credit card early before the due date. Do not go back and use it again. Is that correct, Dora?
You
Because I
can
feel
go
like
ahead
I'm
and- you
paying
can-
it, but then
okay,
I'm doing myself a disservice because by the time the due date comes, I've already charged again.
Well, remember, you pay, let's just say July 15, and
Uh-huh.
you went and charged July 25th. That is not gonna report until 30 days later.
Okay.
Now, there is no problem with that if you're under that 30%,
Right.
35%
Mhm.
threshold.
Okay.
Right.
You're totally fine. The problem is if let's get back with the example that we have from the beginning, this $10,000 credit limit.
Uh-huh.
If your balance is 9,500, you send the minimum payment of $150 and you go and charge 100,
No.
you're staying the same. That payment was basically a wash.
Okay.
And now you have the interest compound on that.
Right.
Mhm.
Yes.
So, but you should give the company enough time to at least process your payment to show that paid off balance before you start charging again.
If you're close to the maximum usage of your available credit, I would say stay away from that until you reach that 30. Once you reach that 30, 35, then you can go ahead and charge because you're gonna make the payment that puts you on that 30% again. So if you never over that now, if you go on vacation and that $10,000 credit card has $2,500 in it, so you're in the 25%, but you have your airplane tickets in there, you got your hotel in there, your meals, your entertainment, the shopping in there.
The shopping.
Yeah, it's important.
Shopping
if
is
you don't
important,
believe me-
Dora.
If you don't believe me, you can ask my husband. But then you come back and in the first couple of months, then let's say, okay, back up. You did your airlines, your rental car, your hotel, your entertainment, your meals, your shopping. You come home with a $6,000 balance. But in the next couple of months, you get back to the 30, 35, then you're fine. The problem is when you go on vacation and you come back with 6, then you take a weekend, then you get your tires in your car or you whatever, and then now it's 6, 8, and now you're at 9,500. Now you're
Yes.
the way that I want people to think is that I need to be in a hurry to get back down to 30%.
Under 30%.
Got it. That's
So, I mean, you said something very intriguing, the statement date. I don't think I've ever even looked for my statement date.
Certainly have not. I mean, I look at it, but I focus on, like I think we most do.
The due date.
Due date. Mhm.
Yeah, well, if let's say your credit card statement doesn't have a statement date, take 2 weeks off, and that's when your payment is due.
Okay. Okay.
Got
It
it.
might have the statement date. I just didn't look for it.
Oh, it's there. We just don't focus on that
You're
date.
not looking for it.
We're looking for it. Due date.
So now that you all are gonna go and look at your credit cards and statements, the other thing that I will ask you to do is make sure that you look at your service fees. Don't ignore those. And if you have a credit card for a long, long time and they automatically increase your limit, ask them, can you waive that? Don't increase my limit. Can you lower my interest rate? And can you waive the service fees? Because sometimes the service fees are like $65 or
Yes.
some more. I mean, mine are like about $40 to $50, and you have not because you ask not. Ask. What is the worst they can say? No. Well, fine. Then now you know.
Right.
And lower your interest rate, and you can tell them, I'm keeping my balance low. I'm always making my payments. Can you take 5 points on my interest rate? So now that credit card that is at 15% is at 10. Or if you have a credit card that is at 21, 22, and they lower it to 15% or 18%, you're saving some finance charges.
Absolutely.
Okay.
That's awesome.
So Dora, when you're looking at from the lender perspective and you're looking at the credit as far as utilization is concerned, are you looking at the utilization across the board for all of the credit, or are we looking at utilization per card?
Oh, that's a good question.
We look at something that is called DTI. DTI, we take your gross right before any deductions and before any taxes are paid, Social Security is taking your gross. So we look at your gross plus the portion that you have on your credit, plus the schedule or proposed monthly payment on that mortgage. So it's three things. So we look at the proposed mortgage and what is in your credit against your gross income. So making that easy to understand, just easy. Your gross monthly income is $3,000 a month. Your mortgage proposed is $1,000. How much you should have in balances in your credit cards? 500, because half of it is 1,500 of that gross. We don't want to see any more. Comfortably, me personally, to say, yes, you're good, you're going to be fine. I want to see somewhere between the 35 to 40%. So if your gross is 3,000, I want to see that mortgage with what you have in your credit, no more than about $1,200.
So if I had the $10,000 credit card and it was at $3,000, and then I had a $2,000 JCPenney's card, and I owed nothing, that would be combined to be the same utilization.
What we look at is obviously looking at how much have you used of your credit limit is important, but for the DTI purposes, we look at the combined payments. So that 10,000 credit card has a payment of 500, the JCPenney has 0, and the house payment is 1,000. You're right there at your 50%. At that point, I would be looking at you and saying, I know this is gonna sound rude, but your credit is mine now. If you're gonna give your Social Security to anyone, you need to check with me first, because we're right there where if your taxes are above what I told you, your insurance is above what I told you, you blown over the out of the water, and now your loan will not go through. So that's what I said, that when I see that 1,200, I tell them, I said, there is 10 commandments that I send sometimes as an email, like, do not take vacation unpaid. Do not charge your credit cards. I know you want that rug and you want probably a new couch or a new set of paintings, whatever for your new house. Don't do it before. Just do it. Once you have those keys in your hand, I hate to say it, but you're on your own. Right now, I'm responsible to you and to both realtors to get you to the closing table and to finish line. Do not use your credit.
I have a question, Dora, about, and I'm trying to see how to make sure it comes out the way I'm processing in my head. Okay, so before I'm about to buy a house, what's the time frame of my credit that you're literally looking at prior to me trying to obtain a mortgage?
So let's say you, Irish, you call me today and you say, Dora, I've been looking at houses and I think I'm ready to buy a house. I'm going to ask you, how soon do you want to move? If you tell me in the next 30 to 45 days, then now your credit be in the shape that it is, because I'm going to be running your credit, giving you your pre-approval to you and to your realtor. Now you out shopping. If you tell me you're going to be buying, let's say for the new year, you want your Christmas tree where you are right now, but after Christmas you're looking to move, then I said we have two choices. Either you know what is in your credit, or you can call the 3 agencies and request your credit. That's something that I also wanted to talk about. And you look at your credit, you look at addresses, make sure that all the addresses where you have lived are accurate. You look at the charges and make sure that there is nothing new there, that if there is collections, that's another question, they get addressed, and making sure that your score is where we want it. Obviously, the higher the score is not what is going to give you your interest rate, but it's a good indicator. We use the credit score for that. So it depends on where you are. If you are buying the house now, then the credit that you have is what we're going to use, because if you're buying a house in 30 days, this is not the time for you to be dealing with collections, because that is just going to mess your credit. And then I will tell you, we will use your credit from the minute I pull it to the minute we close. Because right before the closing, we might take a look at your credit
Mhm.
again, making sure that you have not opened anything new.
This is what we tell people all the time. Once you start looking for the home, and especially once you go under contract, you buy nothing. No furniture, no, especially
Nothing.
not a car.
Nothing. You
Don't
go on
transfer any
vacation,
money. Don't.
You don't quit your job.
Oh,
You don't go and trade your car. I'm
yes,
sure that all of
nothing.
us say, oh, now you have a what? An
Yes,
$850?
they drive up in that new car and we're going, well, this closing just
Please
went right out the
don't,
window.
please don't. It's either the car or the house.
Right,
And I tell people, your house is gonna get you money. Your house is gonna increase in value. The
Yes.
minute you drive out of that dealer, your car has depreciated. Please
Yes.
wait until you get the house before
Yes.
you get that car.
yes. I tell
But
my clients, if you buy a house, you can get a car. You buy a car, you're not getting a house.
that's an excellent way of putting it. Couldn't say it any better.
Correct.
Yeah.
All right. So I think we're at, I think you answered, because I think there was a question about how your credit score affects you. I
Yes.
think we just kind of, was there more you wanted to say? Because I think we kind of touched upon that, or was there more you wanted to share about that?
The other thing that I want to say is how long does bad credit stays in your credit?
Yes.
Mhm.
So for example, most of the things stay in your credit for 7 years. A bankruptcy, it stays in your credit for 10. So what do you do to recover from bad credit? Like I said, at the very beginning, I foreclosed on my house and I have to go bankruptcy. So what is the first thing you do after you go through that? First of all, you stay quiet for a little bit. You do nothing. You let the credit absorb that. Then I will say about a year later, get your own credit, make sure that everything that went into that bankruptcy shows a balance of 0. Because then that means that after you file that bankruptcy, now that clock start ticking. So for example, if you want a mortgage, FHA and VA will take 3 years to get you a mortgage. USDA, no, 2 years. USDA about 3 years, and for a conventional loan is about 4 years. That's chapter 7. If you do chapter 13, the chapter 13 is when you continue paying your bills. Then FHA, USDA, and VA will go to 2 years and conventional to 3. So it lowers 1 year if you do chapter 13.
Mhm.
So the challenging thing is that a mortgage foreclosure and a bankruptcy by a lot of lenders, unfortunately, can be looked at, history will be repeated by itself.
Mm.
I disagree.
Mhm.
I foreclosed and I went bankruptcy on 2008, 2009 when the market crashed and I was out of business. This is my 3rd house after that. And I am not gonna go bankruptcy again. Why? I learned my lesson. I got this
Yes.
slap in my hand.
Yes.
It hurt because I
Yes.
was embarrassed. Here I am in the industry. But you know what? Yeah, I recovered from it, and
Yes.
I'm not gonna look down on anybody because that didn't mean that I was irresponsible with my credit. I just couldn't pay it. I was out of business.
Right.
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 So I have a question. I literally have a client right now. She's looking to rent because she's not able to buy. But what is judgments?
A judgment is something that, for example, you have your mortgage in your house and then you go and build a pool, but you make a loan for that pool, but you don't pay it. In order for them to get a resource to get their money, they put a judgment in your house. So that means that you're not going to be able to do anything with that house, proceeds wise, until that judgment is clear. We're going to see that judgment and we're going to make sure, and the attorneys are going to see that. And in order to give a clean title to the new one, that judgment needs to disappear.
Mhm.
So is a judgment pretty much the same as a lien?
you can say that they are very close
Okay,
relatives.
got it.
Okay.
Okay.
Mhm.
So how do you clean up your credit report then?
Yes,
What
how do you clean up
after
your
you've had a
credit report?
bankruptcy and you've had all these things?
Yes.
What do you do?
Like I was saying, so you stay quiet for a little bit, review your credit, making sure that all the stuff that needed to go is gone. If you have collections, sometimes collections, they stay there regularly. Most of the time, they stay there for 7 years. If the collection is about 6 years old, I'll say, just leave it alone, stay quiet, rebuild new credit on top of it. Now, if the collection is a medical collection and they are less than $2,000, we don't ding you for it. But if this is a collection for an American Express, a Capital One, a Visa, it's gonna stay there. What I would suggest is, okay, most of the time when we go to collections is because something happened. We lose our job, something happened with the economy. It's not that, yeah, I'm just gonna decide not to pay these bills. Thank you, Visa, for sending me to Hawaii. No, that's not what normally people do.
Yes.
So when the things happen, talk to the people. Call that Visa, call that Capital One, call that American Express and say, how can I make arrangement? I'm not gonna make any more charges. I had this 3,000. I lose my job. I was in the hospital for a month and a half. I'm in the job right now. Can we negotiate? And most of the time, they will be willing to do that. Something of that balance is better than nothing. Now, when that is happening, I tell people, okay, they say, yes, we're gonna settle this $3,000 bill for $1,500. You're gonna mail me a letter saying that if I pay $1,500, my new balance is a big fat zero. And you're gonna tell the credit bureaus that my account has been paid and that my balance is nothing.
Okay.
You keep that letter. When you made the payment, don't give them your Visa or your checking account over the phone. You send a nice certified check with copy of that, with that letter, not the original, a copy to them. And then you keep a copy of that check and you keep a copy of that letter. Why? Because when you're ready to apply for that mortgage, because that's the field that we're in, maybe the credit bureaus or the collection company didn't do what they were supposed to do. Now you give me that letter and that check. I send it to the 3 credit bureaus, and guess what? We'll take care of it. Yeah.
So
this
Dora,
is
something
even
you said.
after is
Sorry.
showing as what do you call it? Like a closed account, or it's paid, but now it's closed. This is what we're still doing with those specific accounts.
If the balance is zero, let's say, for example, which one was the one that went out of business? Sears, right? But you had a Sears credit card, you have zero balance, you can close that.
Okay. So I have a question. So you said something, because I heard another, like one of those credit repair mortgage company was talking about, so if you have something, like you said, 6 years, 7 years old, and then most of us will say, okay, I'm going to try to pay this off. And I think this is something that most consumers don't know. If it's that old, and then you go back and you start making payments on it, it starts the clock all over again. I don't think any of us knows that. I don't think many consumers know that just becomes a debt now. That's like it's fresh, like you just started.
Yes, if you have a collection and you want to make arrangement for payment, you don't do that right before you get your mortgage. You do that, like, for example, you would remember the example of how does your credit needs to be if you're buying a house now, or if you're buying it in January.
Yes.
That you do that now, but you buy your house in January. You're not gonna deal with collections if you're planning on buying a house in 45 days. No, absolutely. That needs to be ready. I mean, can it happen? Yes. Have I done it? Yes. That the
Yes.
client say, well, I'm talking with them and they say that if I pay 1,500, I say, okay, where is the letter? And where is the copy of that check? Because now we're in a rush to send that to the credit bureau so the credit bureaus can fix that. So
Right.
when I utilize your credit, that thing is settled and done with. Now,
Yes.
there is, I don't know if that is the answer to that or if you were asking to
No.
use all this credit card. If you have zero balance, can you charge on it? Yes, absolutely. Like, for example, the very first credit card that I was giving after my bankruptcy was a Capital One. That is the only credit card that I use the least, but it's the only credit card that I won't close.
Right. For the history.
Because it's the first one that I was granted after my bankruptcy and my foreclosure, yes.
Understood.
Mhm.
Okay. All right. I think we covered then getting a mortgage after bankruptcy.
Yeah.
Yes, the only thing that I want people to know is that the more the bankruptcy and the foreclosure, you have to do the time. VA, FHA, the waiting period for a chapter 7 bankruptcy is 3 years. Conventional is 4 years. You have to do the time. You have to wait those periods. Are there exceptions because you have established credit and things are in the credit? Maybe, but as a rule, you have to do your time. You have to wait. Yeah, that's what I want the people to walk away with.
Okay.
And this time starts after the bankruptcy has been cleared, correct? Not from the time you filed
After, yes, I want to say after the discharge.
discharge, right?
Yes.
Okay.
Okay.
Once that is clear.
Mhm.
All right.
Yeah, after the discharge and the bankruptcy has been closed, then you might be eligible after those 3 years and 4 years for conventional.
Well, Dora, this has been very enlightening. And I have one last question
Okay.
before we let you go, because I know you have so much to do. All right. I'm a new client. I'm coming to you. I want to purchase a house.
Mhm.
I have been told by my friends and family, because we have all these professionals.
Yes.
Right. We have all these
That's an
resources.
Everybody has told me I need to pay off all of my credit cards to a zero balance before I come and talk to you as a lender. Is this correct information?
No. Not necessarily.
Okay.
Remember when I was talking about your DTI?
Yes.
So let's just make a different example. My gross monthly income is 10,000. My mortgage is going to be 1,000. How much money do I have to have on my credit card? 4,000. I can have a $3,500 balance on a credit card. No problem. It is just, think about this. If the new house payment with the monthly payments you have in your credit is more than 40% of your gross, then yes, don't pay them off to zero. Go below that 30. That's where you need to be thinking. Your credit needs to be below that 30 threshold. Now, if you have a $3,000 balance on a $15,000 credit card, but your monthly gross income is only 3,000, you can buy no house because you're already at your 100%.
You're at your max.
Yes, you're at your maxed out. So if you think of the rule is 40% of the new mortgage and your monthly payments on your credit. Why? Because when we're looking at your application, your mortgage and your credit cards and your cards and your student loans and all of that in your credit is 40% of your income. We haven't gone groceries. You haven't filled up the tank gas. You haven't paid your cell phone. You haven't taken your kids for ice cream. You haven't gone to the hair salon. All of those things don't report. So when we say 40%, we don't want you to be house poor.
Yes.
Buying a house is one of the biggest investments and biggest purchases you make in your life. And yet is, if not the most important, one of the most important, because when I was about to declare bankruptcy, you already have an idea that shopping is somewhat, I have fun shopping.
Yes.
Shopping went out the window. I was
Right.
working on
Yes.
how am I gonna save my home?
Yes.
So make sure that when you get there, get a pre-approval, get with a loan officer that is passionate and cares about you, because that they need to understand that these loan officers understand how important this mortgage is to you, and that they explain everything that goes into it.
Mhm.
In my 20 some years, you have no idea how many people don't understand how their first loan went about. And my job is to get you to the table, but understanding what you have done. For somebody that is not from the United States to be part of the American dream, it's not a job or a career. To me, this is an honor. I get to put families in their homes. This is
Absolutely.
very important. So teaching them and explaining to them, I give them tips. Okay, right now, for example, everybody's screaming about the high interest rate. The interest rates are not high. We're just catching up with what happened with COVID. Get a pre-approval. You're gonna have to pay for where you live regardless. So
Absolutely.
get a sound pre-approval, get
Absolutely.
your family in your home, and I'm gonna tell you, how do you manipulate that interest rate?
Right.
How do you get that equity out of your house
Yes.
quickly? And then you might not have to give 20%. That is a misconception, especially in my culture. You don't have to have 20%. You don't have to have perfect credit. But what you have to do is put your children and your wife and your spouse under a roof. So
Yes.
focus on that. Give us a call. We know what we're doing, at least most of the time. I think I know. And we want to help you. Keeping your credit, make you pay. Okay, wrapping this up, make your payments on time. Don't do it too close to the due date. Keep your balances under that 30% threshold, and don't get overextended. Having 10 credit cards doesn't mean you have good credit. Have one or two, manage them, keep an eye on your credit, keep an eye on your statements, and you should be fine.
I
Awesome.
love it. I love
Thank you, Dora. Listen, we're
That
all
was
just
good.
never mesmerized. I'm like, oh, she stopped talking. Wait, that means we're you
I
have
have 4
given
pages of
such
notes.
Yeah,
4.
right. Me too. I have all my paper is written on now. That is just great information, because as realtors, we want to be able to help our clients really, have this journey of home buying, but for them to be educated. I think that is the most important thing. People don't not buy a house because they don't want a house. They don't buy a house because they just they have no idea where to start. And they have all these people, who read and watch things. And I read about, and I'm telling you, you can't do
Everybody's
this.
telling them what to do.
Yes. And so
they don't own a house
I
either.
think it's just important as realtors that we share that information. We're not just trying to sell you a house. We're selling you your vision, your dream for your family. And like you said, it's probably the largest investment you're going to make. And, but it's also an investment you're making in yourself and in your family and in your future of your family. So it's great that we want to be impactful. I always tell people, I don't sell houses, because that's not what I do. I am here to help you on your journey of home buying, and to be able to help you do that to the best of your ability, to get what you need. And I'm never going to sell you a pipe dream. And I think sometimes people come with this grandiose, I want a 4-bedroom, 5-bath with a pool in the back and a circular driveway. And it's like,
I don't want my mortgage to be over $1,200.
Yeah.
Well, with the little castle comes the little payment. And the thing of it is, let's say, for example, you're a first-time home buyer. You get these newlyweds, they are a new couple.
Yes.
And start slow, start biting. Like I said it before, we don't want you to be house poor.
Yes, absolutely.
Because then you're going to resent making that payment if now your lifestyle has dramatically and drastically changed. But start here. And then as you know, and you're getting the responsibilities of all the things that come with owning a home and all the benefits of owning a home and having a mortgage, then
Yes.
you go bigger, because then you're going to have that little baby, and then that baby, now you're focusing on the school districts, and now you have the teenagers and when they are going to graduate, and then they go to college, and then you have that daughter that is walking in their wedding dress and the father is just waiting at the bottom of the stairs waiting on her. I mean, that's what we sell, and I get emotional about it, because that is exactly our business. Those memories are there. Those pictures
Absolutely.
are there sometimes for generations, and sometimes
Yes.
in the walls, in the staircases. So being careful about how do you treat these people. The rule of thumb that I use is, how would I want this loan officer or this realtor to talk to my parents that just came to this country and they don't know anything about it? I don't care if you're in your fifth home. Half of the time, your previous loan officer didn't tell you something. I'm not saying that I'm going to cover all the bases, because sometimes the loan in itself and some of the things that you confront, you don't do it. But that doesn't mean that you won't. And I always tell you, if you have a question, you can call me. And my clients, you can call my clients. I am emphatic about it. If you have a question, you need to ask it. Because I gave you the loan, but I'm not making those payments. So you need to understand what you're getting into. And just because this is my daily bread, that doesn't mean that if you don't ask, then I'm just gonna keep on going. I stop in the process. Are you understanding? Are you comfortable? Do you understand why you have to get a homeowner's insurance? Do you understand why you're gonna be escrowing? Because some people, do I have to pay taxes? Sure. And Uncle Sam is gonna be in everything that he can get his hands on. So all these things, it's important that they understand. And because along with that picture of that baby or that bride coming down the stairs and you're in your home, it comes the knowledge of having an understanding of the house and the mortgage. Okay, and I'm done.
I get it. No, Donna, like that is perfect. And of course, the phone would ring right now.
Absolutely.
But one of the things that I must say is it's an honor to work with people who are so passionate about it, because as a realtor, I find that I don't want to just be, someone to put you in a home. I need you to understand what you're getting yourself into and make sure that it's going to be what you need it to be. And working with a loan officer like you, I mean, you can see your passion.
Right.
Like, it's not just, we're not just doing this because it's a job. This is what we love, and we want you to have the skills to make this a wealth building for your family. I like that.
I truly appreciate that, because it really it speaks to my own sentiments and why I got into this business, to be able to help those who were in the same position that I was in a few years ago, where I was a newly married wife and starting a family, and now we're looking to purchase a house. And the agent that I had, I will never forget him. And it was back in 2008 when we started our process. Isaac Scott. He left such a positive impact on our lives. Like, he took us like we were his own children and literally guided us through the process of purchasing a home. Here I am looking at a house like, oh, it looks nice. And he was like, baby, no, look at this. This, look at this. I wouldn't want this for my daughter. So I'm going to tell you what I'm looking at, because we didn't know. We were, we had blinders on. We did not know. We were brand spanking new. My parents had bought a house 45 years prior, and, my husband was coming from not having owned a property, or, his parents not having owned a property. So we were just young and naive, and to have an agent that was willing to take the time to help us in that process was a blessing. And I never forgot that. Never
That's
forgot that.
awesome.
And so
And that's what our
that's,
role is
that's
in
the
life.
lasting
is-
impression we want to
Yes.
have on our clients.
Yes. To leave experiences, not a purchase, not a
No.
deal, not a brokered deal to leave experiences with
Right.
people.
Right.
We all
Yeah.
have been in this situation where you go to a doctor and they never look at you. They're always taking the notes. They give you the prescription and off you
Yes.
go.
And I'm never going back.
It's the same thing. We have the responsibility of making a positive impression on the people that we're serving. It's a
Absolutely.
service we provide.
It is.
Absolutely.
Yeah.
Thank
Well,
you so
Dora,
much.
we thank you so much. We have thoroughly enjoyed you. You have given us so much information. We love that you have shared all this knowledge with us. And of course, as time goes on, as things are changing, the market changes, we will definitely be tapping on you again to come back and share information with us. So we really do appreciate all that you have done today. And do you have any final words that you'd like to leave us with?
Well, first of all, I want to say I'm not freaking out right now. So
Good.
you three ladies have done amazing at making me feel at ease.
Good.
I truly, from the bottom of my heart, hope that even if I touch only one that says, oh, this is going to help me, then I've done my job.
Yeah.
I'm available all the time if you have questions. To the three of you, thank you so much for
Thank you,
the honor
Dora.
and the privilege to have me be part of your podcast. I truly hope that I will be invited again.
You
Hopefully
will.
with a topic that is not so skin crunching like credit. But I think that when you, no, Iris was the one, what do you want to talk about? Credit is something that needs to be talked about.
It is.
Absolutely.
We all can use tips to get better. The only thing I can say is thank you. I'm honored. And now I'm not freaking out. So can we talk about something else?
Absolutely. We'll figure out the next thing we're going to talk about.
Yeah, but I'll be freaking out then.
Thank
Thanks,
you all
ladies.
so much.
Thank you
You
so
all
much.
have a wonderful week. Enjoy the rest of the week. It was
You as well.
awesome spending the morning with you all, and we thank you all for joining us.
Thank you.
Have a
Have
good
a
day.
great week, ladies.
You
Bye-bye.
too. Thank you.